Hi everyone, this is Arpad from Starpath Academy, and today I want to talk about the stock market during hyperinflation. So, our background is red today. The stock market is mostly red. It's mostly because the reaction to the Fed announcement, although I think I have mixed feelings about those because technically it should have been factored in, right? So a soft landing because of this becoming a more soft-ish landing, right? According to Fed speak, whatever that means. But in my opinion, I mean, raised rates should have been done much sooner, and the market needs to go where it needs to go and find and rebalance itself, right? The issue, or my issue is, if you're interested in my opinion, is more that the Fed is more pushing the gas and stopping, right? Pushing the gas and then stopping. So more that's the problem, and that's causing these big cracks. What will happen? I don't know. I don't even give advice, definitely not investment advice. And as you know, that I'm mostly out of the market. However, I do have a Webull account, and I do try to take some, profit or advantages of these huge swings. Once I know, kind of figure out what the market is trying to do. I'm mostly there just to take advantage. I'm not betting on the stock market long term in these conditions. But I do have an account, and if you are interested, then I will have a link down below and share the link where you can get, I believe, 5 free stocks once you add $100. But I'm not giving you advice. And let's talk about the stock market during a high inflationary period and hyperinflationary period, and why it's not the best bet, in my opinion, and in my experience from the Romanian high inflationary period. So let's just briefly look at the big picture, right? So a high inflationary environment is usually good for some stocks, in my opinion, right? Because money is getting cheap, and what's happening that people are rushing into anything other than cash to kind of offset the loss of purchasing power that they are losing because of inflation. So they park their money somewhere, right? And usually it's more of a group think method where they park where everyone is parking, because that gives it momentum, right? So popular stocks tend to be more popular under high inflationary periods. Also, stocks that are providing goods, so physical goods that people cannot live without, because that is more elastic. Their product price is more elastic. They can catch up with inflation because they will need to provide it, and people will need to live whatever the price of that is, right? Again, not stock advice, but just general information. Usually that's the case, right? When I told about hyperinflation and my experience during hyperinflation in Romania, it's different than a high inflationary period. It's very different, right? And one of the reasons is that in a hyperinflationary scenario, the supply chains break down much faster. So even if it's a very good, well-run company, even if it's producing something very good that people cannot live without, because of the environment, because you may not be able to ship in goods from outer seas, right, out of the country, importing is broken down, right, because the other country may not even take your currency, because wars might be happening, economic calamities are happening in other countries, political shifts are happening. It's just a horrible environment for even a good company to run. So usually they just stop. One thing that they do is they stop selling stuff, because it's better to wait with their current inventory and then sell it later, hopefully when inflation has peaked or it's leveling off, even after a hyperinflationary period, and sell the goods then, is instead of selling now at a beginning of hyperinflation, and they sell it, and that money 2 months from now won't even be enough to resupply the raw materials to produce the goods again, and they go bankrupt. So hyperinflationary scenarios are very different than high inflationary scenarios. Right now, what we're having, in my opinion, is a deflationary scenario because, well, we'll talk about that. But I mean, just raising the rates is one thing, but also there's a dollar crunch. The US dollar is becoming much more valuable compared to other currencies. And that has other issues on the edge of the empire, right? A very good talk that that I listened recently was about the milkshake theory. What's happening? In my opinion, that's what's kind of playing out now. I'll have a link to the milkshake theory explained a little bit, but basically the basic concept is what also I've been telling about, that there's sort of a sucking back of the water before the big wave hits. It's kind of, it needs to suck in all of the US dollars. The system is sucking in the US dollars from the edges of the empire before a possible hyperinflationary scenario hits of overprinting money, right? So stocks, in my opinion and in my memory, right, they do horrible in hyperinflationary scenarios. Even while the stock price is going up, the company may not even be producing anything anymore. They might not even be selling anything anymore. The stock price might still go up because people are still seeing it as a safe haven to park their hyperinflated money in. However, because it's not really a company, it's more just a speculation or a game that they're trying to save their currency, it almost never even catches up with the hyperinflated price of bread, other necessities, food, and usually not even close to gold and silver in a hyperinflationary scenario. Now, some companies do well in the sense that if they are able to provide exports like raw materials and that sort of stuff, then they tend to be good as long as the neighboring countries are not hyperinflating, right? Because then they can sell these products cheap, right? But most of the times these companies are taken off and they are nationalized by the coming government that is promising to help with the current situation. So all in all, in my personal experience and opinion, stocks are not the best place to be in when hyperinflation is happening. However, in my opinion, right, not advice, there's usually a deflation that happens before high inflation, and even before that, there's choppiness in the market that you can take advantage of if you are a pro trader or if you know what you're doing, right? Now that is my play on it, so that's why I still have like some stock and I mean minimal amount from my portfolio, but I do have this kind of gameplay that I'm looking at the market. Is it overvalued? Is it undervalued? What will people think that it is? Because people are mostly still in the conventional mindset. They're not like most of my listeners, and you can kind of see what their play is and what they're trying to achieve, what they are listening through the media, and anticipate what the Fed will do. And it's fairly easy to kind of play on these swings if you know what you're doing. But I do not recommend, it's not for everyone, right? I'm playing it a little bit, but it's more for fun or trying to kind of figure out what's happening. And some of these huge swings, you can make a lot of money. So if you're interested, you can do that. And I'll have a link below, but it's not something that I'm planning to hold on during a high inflation or hyperinflationary scenario. And right now, I'm actually expecting some more deflation in the stock market, right? So that is my kind of 2 cents and the short take on what could be happening. If you have more questions, then please feel free to put them in the comment section, and I will do my best to answer it. And if you're a member on Patreon or Buy Me a Coffee, then feel free to put detailed questions there, and I'll do videos about answering those. So thank you very much, and have fun.